Hello and welcome to the latest in our roundtable for the Value Exchange. My name is Justin Cash, I'm the editor of Money Marketing, and I'm joined today by some of the smartest brains in the business to discuss the cost of care and how we deal with issues like dementia. It's really moving up the agenda for a lot of financial planners that I speak to. People are living longer, they're living healthier for longer, but they've also got to manage an increasing cost as they do so. I'm joined by Tony Mead, Divisional Director from St James's Place, Duncan McKenna, Commercial Director at Supercarers, Katrina Loomis from Financial Care Solutions, and Dr. Ali Hassan from Vitality. Guys, thanks so much for joining me. Katrina, why don't we start with you? You obviously do a lot of work as a planner in this space. What are the key trends that you're seeing at the moment, the key strategies you're using with clients to make sure that they can afford care in their older age?
Yeah, I think quite recently I'm seeing a little bit of reluctance to do too much in that space, really. I think people are just hanging back waiting on the government to say something on adult social care and what's going to happen going forward. So I spend a lot of time educating clients at the moment because we can't hang around waiting on the government. We've got to do something about it now because care needs are still happening and it still needs to be funded. So it's a little bit frustrating, but at least we're past last week now, so hopefully we'll start to see some movement on the adult social care space and some more money going to it and hopefully a consultation paper before long.
How are people dealing with that shift as the government have made cuts in areas like social care to this personal responsibility, so the need to start saving earlier and think about care much earlier?
Yeah, it's crazy. It's the most expensive part of retirement, and it amazes me how many people just don't want to think about it or even discuss it. It's quite sad because I see a lot of it and I see a lot of crisis points and it's such an expensive thing. I see people putting loved ones into care homes that they just can't afford and they have no idea. They've not taken any specialist advice and they've no idea that it's going to fall apart after 6 or 9 months because the money runs out because they think the state will pay, but that's clearly not the case. So there's a huge education piece out there for people really and I think we all have a responsibility to do that, providers and financial planners.
I'll pick up on that. There's a couple of really interesting points. First of all, education is absolutely key here, but it goes way beyond providers and financial advisors. For me, it has to start with the government. The government absolutely have to be honest with people that realistically the country can afford to actually deal with social care for those with the greatest need, with the least ability to pay. And what they need to do is be honest and say, everybody else, you're on your own. Now, I'm not saying they need to use those words, but that's the reality. And for me, only when that happens will we actually get people starting to think seriously, because, as you said, people are very reluctant. You know, people don't put enough money into their pensions, let alone actually start to think about, well, do I need to put money away for care? That doesn't happen. And I think most of the financial advisors, certainly at SJP, you know, when it comes to giving advice to care, they're almost always giving advice at crisis point. And that makes things much, much more difficult. And realistically, the only tool that you have really at your disposal is an immediate needs annuity. Now, in practice, there are other things you can do, but if you're only dealing with people at crisis point, it's either an immediate needs annuity or some form of deaccumulation of existing capital. But of course, advice in this space is much broader than just financial advice. People need help understanding the type of care that they want, because it isn't just about nursing homes and domiciliary homes. You know, people want to stay in their own homes. You know, people can actually have live-in carers if they want to. But it always comes back to the same thing: can I afford to do this? And you're right, a lot of people aren't getting advice. The problem with not getting advice is not just a financial thing. It's actually when people don't get advice and they run out of money, it actually affects their health. Yeah. And that's the really, really sad part of this.
Yeah, I mean, if I can jump in there, I mean, I think you're completely right that it really has to start at governmental level, because, you know, we have, I think on the last round of statistics that were available for it was something like 74% of councils are only providing care for people that are in really substantial or acute need. Everybody else, nothing. And as you say, care is something that we spend our adult lives and our professional lives planning for retirement. and planning for the future and ensuring that our kind of, protecting our assets and everything else. And we don't include care in that. We're somehow uncomfortable around it, whereas it's actually just a logical part of that debate. So when we're taking consideration around when we want to retire, the amount of income we want to have during those years, what we want to leave to our descendants, all that kind of thing, we really need to consider care in that, because far too often, obviously at the financial advice stage, but also at a service provider stage, everyone comes to us in crisis. There's very, very few people that are coming to us for care delivery that are not desperate. And that's something that we really want to try and address. So I think that's why, the kind of work we're doing with Vitality at the moment is really important, because it opens up I suppose a softer advice angle for consumers that doesn't need to be so narrowly focused on the financial impact, but start with a more kind of emotional, like the emotional engagement, making people aware of everything that's available to them, the limited government support that is there, how to access it, because that's the other thing. There is some stuff available, very, very little, but still people don't know how to access that. So you'll find that a lot of people are actually procuring care from our service and the ones that we pass them on to aren't aware of the rights that they do have and the compensation that they can claim. So I think that's a really important starting point, that the kind of awareness and the normalisation of this needs to be right up the public agenda, really.
So why haven't we had those conversations before now? Is it, something about the training, about qualifications, about just, the messaging? How do we get people to sit up and pay attention to this?
I think the upstream coalescence of all these issues is the difficulty that you have in getting people to talk about these issues in their 20s and in their 30s, when they're in a position that they can understand the impacts of them, but also do something about them too. Because if you're in your 50s and your 60s, that runway that you have to build a cushion where you might have other dependence on your finances, whether it's mortgage or children, become much, much harder to break away from, and all of that becomes much more challenging too. Everything I've heard is absolutely on the money. The challenges are getting harder and harder, and with the changes in society, from probably a reduced role from informal carers to longer time spent in the workplace to, I think, an increasing intensity of life in general, it is absolutely crucial that there is a way that's found to get these discussions, as everyone says, normalised earlier, and actually part of, I think maybe it should be PSE education for schools. Maybe it should be when people are teenagers, they should think about financial planning. These discussions need to happen because there is a rebalancing between what the state will provide, what your family will provide, and what you'll be expected to. I think the other important part to call out too is how to make decisions when you're not in a pressured time too. Because we see this in our health side as well as our life side, in Vitality. People typically don't have a great deal of understanding how to differentiate between the quality of different services, whether it's a different oncologist or surgeon or GP. It's very similar in care as well, where there are lots of leading indicators you can have, but there is no single underlying algorithm or number that can give you a tick or an X on what's right for you. These are decisions that need time, they need thought, they need space, and they need funding. And really for me, it's about how can the industry and all its actors work together to bring that discussion upstream and earlier in people's lives.
I would like to see families discussing it more as well, because it can be quite difficult for families to talk about that with each other at a crisis point or when the need is almost upon them. And I just think it would be so much easier if they would think about it at the outset. If I need care in the future, what would that look like? How would I like it to look? Would I have a desire to downsize or right size or move somewhere else? All of those things are very important for later life planning, and if those discussions happened earlier with families, then parents could make sure that their wishes were followed through, and there could be a sensible draft financial plan there really to fund the care. I don't just mean on the financial advice side, because it has the non-regulated piece as well, which is very important, and it often starts with the non-regulated piece anyway. And I just think that would be so much better for families really, to try and educate the families to discuss those more.
I think that's a really important point, because again, a lot of the people that we speak to at this crisis point, it is usually the families and looking after a loved one, and frequently when it gets to that crisis point, it's a real moment of duress where nobody's thinking clearly. Everyone has different ideas about what the desired outcome should be, and sadly you see rifts developing in the families of the loved ones that are in need of care.
And there's something about it needing to be a dialogue as well. your expectations of what you're able to do when your parents get older are probably very different in your early 20s if you don't have a family or mortgage than if you're mid-30s if you have 3 children and a mortgage and you're, I don't know, doing a part-time degree and have other demands too. And being able to make sure that it's normalised as part of the discussion is really important in a way that's sensitive and somehow broaches those really difficult discussions around accountability for what is the family estate.
Funny, I mean, I do agree with you entirely, but I think we're miles away from normalising those discussions. I mean, it's absolutely the right way. If we could achieve it, fantastic. But I see far more rifts in families having different ideas about how my inheritance is going to be spent. I mean, it's one of the most, in many ways, giving financial advice on how to fund care is actually quite easy. But it's all the non-regulated stuff around that is quite complex, and an advisor's got to have an understanding of things like, you know, what the Mental Capacity Act says, and you do get, I mean, it's really sad, but it's a sad reality that things like lasting powers of attorney, which not enough people have got, you know, you do get this 2 different types of attorney. You do genuinely get people who, that's my mum's money, and I'm going to use it for the best outcome for her, and you get attorneys that actually have the view that it's my money, I haven't got it yet, and it has a massive impact on how you advise families, and you need to take these things into account. But I also think we have to be very careful about not looking at this as just a single problem for people in crisis. I think it was, and I don't think we will now have a green paper. I think that's just gone. And I'd love to think that there will be some cross-party support for all the parties addressing social care. But I think it was Jeremy Hunt, when he set his 7 principles for the Green Paper, one of those principles was actually addressing the next generation. And we need to actually make sure that next generation are looking at ways of funding care. And actually, that next generation are actually people of my age, you know, in their 50s and early 60s, who are probably not now going to inherit their parents' property because that's going to be used for care. And how am I going to fund my care? I think it was Dilnot himself who said that long-term care insurance is the last uninsured risk that exists in the UK. But we still haven't really seen major development of insurance-based policies. But actually, for people like me, it's probably the only way I'm going to be able to afford what could be a substantial cost in care. And I know Vitality and AIG have got a sort of care policy linked to a whole of life, but it probably hasn't been as successful in terms of sales as I think we'd all expected it to be when it was first launched. And that probably is because a lot of advisors aren't aware of it. But hopefully, as time goes on, that will become more options in that space. I'd certainly think that would be a massive move forward.
You briefly mentioned mental capacity there. Obviously, one of the issues in living in later life, particularly in modern society, has been the rise of cases of dementia, Alzheimer's, mental conditions and vulnerabilities like that. Does that bring up specific challenges for planners and for working out the costs of this? I know it's a special area that you've done a lot of work on, so we'll start with you, Ali.
I think mental capacity ultimately relies on the idea that someone has to be able to understand the information they have and to balance it to make a decision and to be able to communicate that effectively too. And it becomes challenging with degenerative conditions because you can have capacity to make one set of decisions but not another. You might have capacity at one point in the time but might not another. So before you take your medications versus after. And you also have the chamber around you that might interpret your capacity to make those decisions in different ways. And the minute it starts involving professionals rather than family members, it becomes very difficult, as Tony was talking about early on too. I think ultimately there is a real space needed again to bring these discussions earlier on too, and to find a way so that people's ideas of what they want can be communicated clearly, so that their best interest in some way can be defined at a time where someone doesn't have capacity. Because ultimately the framework, if you don't have a power of attorney, is that you have to have your decisions made on a best interest basis too. And best interest can be very, very subjective for the reasons that we talked about.
And I think another complexity there is as well, actually when we're talking about conditions like dementia and Alzheimer's, the diagnosis of those is often quite late because the symptoms that present are very similar to depression and various other things. So, you know, in light of, say, a familiar, like a spousal bereavement, the remaining spouse may seem to be, you know, disorientated, very depressed, somewhat volatile, all of those kind of things. And quite often those symptoms are discounted as something that, you know, could be discounted as grief, whereas in actual fact they're the early signs of dementia. And getting that actual professional diagnosis in place is often quite challenging for families to do as well, because, you know, a large part of it depends upon knowledge of the person in a normal circumstance prior to those conditions presenting. So yeah, it's all I keep saying is how complex it is, but it does seem to be, you know, it really is.
There can often be quite a lot of denial going on as well.
Certainly, and I think, you know, and I've had personal experience of this myself with my own mother, and I've seen how it's actually very, very difficult, even as somebody who knows them very, very well. They become very increasingly good at concealing those symptoms from you because they're aware that it's happening to them, but they don't necessarily want to acknowledge it. So I think that the kind of level of familial complexity and kind of emotional strain that goes on in so many directions makes these conversations really, really hard. And then again, coming back to that point of just talking about it far, far earlier, because I do see it as part of that holistic conversation that people have much earlier in their life around that later life planning. And I think as hopefully it will become more of just that kind of natural sequence of events that we talk about and plan for. Because obviously we all hope for the best, but we, generally speaking, plan for the worst.
I think that the point that you made about sort of, you know, acting in the best interest being subjective is a really tough one, isn't it? Because people often think that, particularly in things around dementia, it's one-dimensional, but actually that rarely happens, and you do get sort of lucid moments and less lucid moments. I mean, I often think, actually, a bit like when you set up a discretionary trust, you get clients to do letter of wishes, to sort of try to express how they would like the trustees in their absence once they're died to actually run the trust. You could do that with lasting powers of attorney. You could say, you know, okay, this lasting power of attorney will only effectively cut in when I am no longer able to sort of run my own affairs. There would be nothing to stop you trying to write down actually what you would like in the circumstances where this actually does cut in, but you rarely see that happening.
How, from a planning point of view, with the complexity of conditions like dementia, can you start to do your fact finds, your cash flow models, the kind of technical stuff?
Yeah, I guess in this space it can be a slower journey because I always allow extra time, extra meeting time, maybe even extra meetings, really depending on the client. I don't always see the client. Sometimes I might not meet the client and it might be just the powers of attorney that I deal with. But if I do see the client, I do go at their pace, really. But it's important to find out as much as you can about them beforehand, if they have got a particular condition, how that would be affecting them, and just practical things like adapting the room, adapting the environment, making sure it's comfortable, making sure it's nice and quiet, if they are hard of hearing, just thinking of lots of things like that, really, just to make it comfortable for them, because you want them to be confident in the meeting, you want them to get the best out of it as well. And clients don't always want to meet in their own homes, sometimes they want to come and meet you, so it's quite important for me. I have an office environment that I use for that purpose, really, just to make people more comfortable. But yeah, it can be. I've just learned a lot over the years, really, just, you know, trying to teach myself along the way as well, you know, with different conditions and how it affects people. Because I think it's important to have that empathy and you know, just understand without patronising and, you know, bring them through the journey as much as possible. But I'd always encourage family members to be involved in the discussions, because it takes the pressure off the individual having to remember everything, but also it's much better. I think it's much better to have everybody involved that's relevant, really.
Obviously, Terry got years of practice to make this situation easier, but what if an advisor is just starting out on this journey? Maybe they've got some new clients that have particular care issues. Where can they go for support to learn these behavioural skills that will help them?
It can be quite tricky. I didn't learn it all on day one. I just had to get on with it and, you know, teach myself. And I guess the supports that I used for the non-regulated, activity, I use care navigators, and that's very valuable for clients because often the advice starts there. I'm a member of the Care Advisor Network, which gives me a lot of access to other professionals that I use as well, and that, we use each other for different parts of the care journey. And I've got the SOLA accreditation as well, which is very focused on the soft skills in that later life space, which is really good. And I've done the SOLA Care Standard. But the reason I've done all that is because 5 years ago I really wanted to bring myself up to speed, and I didn't feel like I was good enough to be able to do this unless I had all that behind me. So I just gradually did it, but actually it's a huge amount of information out there to absorb and to get through, but it just makes me much better at delivering advice for people, really. So I would really rate it. I think if anybody wants to get involved in this space, I would think about it very carefully, because it's not for everybody, and it's a very different world to retirement planning and mainstream financial planning. So I would say to advisors, if you're interested in getting into the space, fantastic, because it's a brilliant, rewarding, work to do. But if you're not, please try and find a referral system for yourself so that clients are not disadvantaged, because you don't want to discuss care with anybody, and just have that in place, really.
Yeah, this market absolutely does not suit everyone. I think it's interesting that we have a practitioner here who's female, because
there's very few of us.
well, actually, genuinely, there aren't enough advisors operating in this space, and there are all sorts of reasons for that. But you really do have to have really strong empathy skills, and whether we as males like to admit it or not, females are better at empathy than not. And yes, there are some good males that are advisors out there operating in this space. They tend to be older, but it's not a market for everyone, and it's a tough place to operate. But as you say, massively rewarding.
Yeah.
I'd just chip in there, because I think that sort of, again, the work we're doing with Vitality at the moment, we've actually fielded quite a few calls from IFAs who've rung in because they've been introduced to it via Vitality. So rather than speaking to the client in the first instance and having then referred to us, their IFA has rung us and asked for some general signposting and kind of holistic advice. And although the service has been obviously geared towards customers, we've been very pleased to sort of field those calls and start a dialogue with the IFAs who've shown like a real interest, actually. So that's been really reassuring.
It's interesting you picked up on the professional connections point as well. How do we get those ties fostered better between the planners, the providers, the homes, the health practitioners, anyone else who might be involved in this journey?
Well, I'll be honest, I've found it really difficult because I've an ex-colleague of mine who used to work in this sector used to call the journey the drunken walk. That this is the journey between maybe sort of the children realising that mum or dad can't live on their own anymore, right through to eventually deciding what sort of care they need. And it's sort of there are really good number of small businesses that tend to be small businesses out there who can actually help people with real value-added services on that journey. But the problem is bringing them all together in a way that actually is structured and that you can rely upon them. And often these businesses actually, because they're well-meaning and because they're not in it necessarily for money, they don't make any money. They don't make enough money. And actually, I think they need to rethink that, because fundamentally they're doing really good services, but unless they're around to continue to do that, then people are going to miss out. But bringing all these together is really tough, and it's something that I'm certainly trying to do, but it's very, very difficult to do. Very difficult.
It's probably a bit easier for me because I'm just me, myself and I. So I've built up just a network of contacts that I work quite well with, and some people are individuals in their own businesses too, but I appreciate for SJP is a much bigger organisation.
Yeah, because when we work with providers, clearly we do immense amounts of due diligence, and actually doing that sort of due diligence on small firms, you fall over straight away, and it's not because there's nothing wrong with them, it's just the sort of demands that we place on them, they just can't conform, and it's a real shame.
No, I mean, that's something we've found as well, even in terms of the kind of financial runway of some of these providers. It's very difficult to then engage with them, because you can't be sure that they'll still be there in 12 months. But I would echo the point that there are so many amazing small enterprises and social enterprises working in the space, and I think like bringing those together at the right point is a really important thing, and something we're certainly trying to do. Obviously the business I work in has a specific kind of care fulfillment and delivery aspect, but that's only ever going to be viable for a sort of very small percentage of people. And really what we want to do is be able to touch far more and introduce them to lots of services. Like there's a wonderful one that a colleague introduced us to recently that we've started referring people onto frequently, which is a non-profit that simply covers its cost through a very low hourly charge and has people volunteers that turn up and do the shopping for you or make you a cup of tea or something like that. Something that's very sort of low touch. It's not about care and that kind of medicalisation of a need. It's just about a little bit of help. Sorry, Karen.
I think what's also interesting with these, there are lots of different options that you can try, many of which are subscale, but the other side of it that has to be considered is that the client's experience is very personal too. So particularly for the actual care bit of the services, which are very personal and require a decent bond to be made between the person providing the care and the client, those things can sometimes take a while to get it right, and there is no real standardised solution, I suppose, to just curate that personal decision to find someone who really is the right personality type. The caring needs of someone who gets dementia in their 50s, who lives in a flat in the city and is used to online shopping, is going to be very different to someone who's in a converted barn much further out.
Yeah, and that personalisation point's really key, because I think when we have a kind of one-size-fits-all model for care delivery, it really doesn't take into account what is effectively spending a large portion of your life with another person. And regardless of what that professional relationship is, there needs to be a positive personal one. Otherwise, the quality of care and the quality of life of the care recipient is not going to be what it should be.
What about on the product side and personalisation? We talked earlier about the immediate needs annuity, but can we look at more innovation in, say, the dementia space on this side?
I think there's always more that can be done, and certainly at Vitality, in our group in the UK and also our parent group, we try and stay abreast of trends, what are happening at a overall kind of population-wide level in terms of people living longer, but also at a kind of geographical economic level, to think about what's happening over the mid and long term and the kind of needs that people might have from when they take up a policy in their 30s and 40s up to the longer time too as well. Certainly for us, when we embarked on our latest product that you all know about, we spent quite a lot of time looking at it, and we felt it was quite different, and we always recognise, as Tony was saying earlier, these newer products, they take a bit of a while to ratchet up for people's understanding. So there's always a balance between wanting to be radical and deliver something that's completely different and transformational versus something that would be sustainable and would demonstrate the right level of progressive traction too. I think for us as insurers, the bit around how the money is provided and how the risk is underwritten, those things are things that we are going to continue to optimise as we go on as well. I think the other side of it, and we see this a lot in the health business too, is we're being asked more and more to curate and support how that's money spent as well. So for us, I can't imagine a future where we're not doing more and more and more as the years and decades pass for us to decide who the right partners are if the people buying our policies want help.
Guys, we've covered so much ground already. There's some absolutely great stuff for everyone watching, so thank you so much for the time. Thanks so much for watching. You can find more great videos, podcasts and blogs on the Value Exchange. Just go to the Money Marketing homepage and you can find it there for everything health, wealth and life. I'm Justin Cash. Thanks very much again for watching.